All right, let's crack the code on the stock market. If you've ever listened to financial news and felt like you needed a secret decoder ring just to keep up, well, you've come to the right place. We're going to get you fluent. You hear all these words thrown around: bulls, bears, bids, asks. The whole world of trading can feel super intimidating, almost like it's packed with jargon that's designed to be confusing. It's really easy to feel like you're on the outside looking in. Well, that all ends today. The goal for this explainer is really simple. We're going to give you the basic vocabulary you need to actually understand what's going on in the market. By the end of this, you're going to have all the key terms down cold. Okay, so first things first. We have to start at the very beginning, with the most fundamental building block of this entire system. What in the world is a stock? Think about a massive company, right? Like Apple. A single stock is just one tiny, tiny little slice of that entire company. So when you buy a share of stock, you literally own a piece of that business. It means if the company does well, the value of your little slice, well, it can grow right along with it. That's the core idea. So if a stock is a slice of a company, then the stock market is just the place where all those slices get traded back and forth. Honestly, the best way to picture it is like a giant global auction house that's open for business every weekday, connecting millions and millions of buyers and sellers, all in real time. Okay, so now we know what's being traded. Let's talk about the overall feeling. You could even call it the mood of the market. And this is where you hear those famous animal terms come into play. First up, the bull market. This is basically a happy, optimistic market. It's when prices are generally on the rise, the economy feels strong, and people are feeling pretty confident about investing. And the name itself gives you a perfect visual. It's thought to come from the way a bull attacks, by thrusting its horns up into the air. And you guessed it, on the complete flip side, we have a bear market. This is when prices are falling and investors are starting to get nervous, even fearful. And just like the bull, the name comes from how a bear attacks, by swiping its big paws downwards. So just remember, bull up, bear down. So let's just put them side by side to make it crystal clear. A bull market, everything's pointing up and the mood is confident. A bear market, the direction is down and the mood is fearful. At the end of the day, these terms are just really simple, powerful ways to describe the market's overall momentum. All right, we've covered the big picture. Now let's zoom in and get into the specific language you'll see every day when you look at an individual stock. First up is the ticker symbol. This is just a company's unique nickname on the stock market. It's nothing more than a simple shortcut. So instead of typing out Apple Incorporated, you just type its ticker, AAPL. For Tesla, it's TSLA. Simple as that. Next, you'll see something called volume. This just tells you how many shares of a stock were actually bought and sold in a single day. So if a stock has a really high volume, it means a ton of people are trading it. There's a lot of interest, a lot of activity. Low volume, on the other hand, means things are pretty quiet. Here's a fantastic way to think about it. Volume is kind of like the size of the crowd at a sports game. A huge, roaring crowd lets you know something really important and exciting is happening down on the field. High volume, for a stock, it signals the exact same thing. Okay, so we know how much activity is happening, but what's the actual price? Well, you'll almost always see two prices listed, the bid and the ask. The easiest way to think about this is like a real-time negotiation. The bid is the highest price any buyer out there is offering to pay, and the ask is the lowest price any seller is willing to accept. So, for example, a buyer might be bidding, say, $150.25 for a share. But at that exact same moment, a seller is asking for $150.30. That tiny 5-cent gap between them, that's what's called the spread. A trade actually happens when a buyer decides to raise their bid or a seller lowers their ask, and they finally meet in the middle. So let's just take a quick breath and review the brand new financial vocabulary you've picked up. You've actually come a really long way in just the last few minutes. I mean, think about it. You now know that a stock is just a small piece of a company, and the stock market is the giant auction house where they're all traded. You can spot the market's mood, whether it's a bull charging up or a bear swiping down. And you can decode the language of an actual trade, the ticker symbol, the volume, and that really important bid-ask spread. You basically speak the language of the market now. So, you see, the world of finance isn't some foreign language spoken in a secret club anymore. The jargon's been decoded. The only real question left is, now that you speak the language, what are you going to discover next?